One of Nigeria's financial institutions, Tier 2 bank Fidelity Bank, has announced a profit before tax of $6.6 billion Naira in the first quarter of this year, representing a marginal drop from their first quarter last year. The CEO says the bank would explore new prospects that are opening up in the retail market, continue to focus on customer centricity, innovation, and digitization, whilst keeping its eye on governance, risk, and liquidity. From banking, we go to breweries. Guinness Nigeria PLC has reported a revenue of 96 billion naira for the 9 months ended March the 31st. This represents a decline of 5.3% compared to what was recorded in the corresponding period of 2019. The decline in revenue, according to the company, was driven by impact of volume excise duty increases and the COVID-19 pandemic. Joining me in the studio to make sense of these numbers is Arise Business Analyst Chika Mbonu. Chika, you're very welcome. Thank you so much for joining us. So I believe we're starting with Fidelity. Yes. Okay. So what's your take on the numbers from Fidelity?
A Tier 2 bank, 250 branches across Nigeria with a national franchise, about 830 ATMs around the country, more than 11,000 POS, and then almost about 6 million customers. So a Tier 2 bank aspiring in 2022 to be in Tier 1. So this year, the earnings season for the quarter, quarter one results, gross earnings, as you, the top line there, you see, came in at about 51 billion.
Okay.
A growth of 5.7%, driven principally by the growth in their total net interest income, you see, by 48%.
Yes.
And that growth has been driven by the fact that have managed their deposit costs substantially and grew their retail deposits, especially in savings account. Savings account contribute about 25% of their total deposits. So that's how they have managed to hold their costs down on the net interest income. If you look at net fee income, you can see it got down by about 28%.
Yes.
Again, sign of the times.
Regulations.
Even though, again, digital income is about 25% of their this fee income.
Yes.
But this is regulation is having an impact on the bank.
So we're seeing it.
Seeing it live. Affecting the bank.
Indeed.
Just like we said for the other banks.
Yes.
The regulatory issues, reflect all their figures. Okay. Look at net impairment losses. It's very important there. You can see it grew by that. Sign of the times too.
Yes.
Slowly the bank is increasing their provisions.
Right.
In anticipation of what we're going to face, what is to come. And that's why you can see they moved it up by almost $1 billion. And so not surprising, therefore, there's a marginal drop in their PBT by about 1%.
Okay.
So for the quarter, a decent quarter for them.
Yes.
But as I said before, with other banks, this is going to be, I think, most of the best quarters. The second quarter is going to be very soft. Quarter two is going to be very soft for most of them, and they're going to face challenges. Total assets grew by 6.3%.
Okay.
On the back of the deposits, the customer deposits growing by 10%. So you find they're very strong. Even though for Tier 2 bank, they're very strong in the corporate banking, but they're very, very also strong in the retail segment. Okay. In most of the core markets in Lagos, you find Fidelity Bank as a leader in most of these markets.
Okay.
So the customer deposits grew by 10.4%. And then, of course, on the back of that, they grew the loans by about 3.5%.
Okay.
And a lot of the loans now, the retail credits are flat, reflecting the COVID challenges that everybody is facing now. If you look at the ratios, they need to look at their cost-to-income ratio. For most banks now, with incomes not growing, everybody has to work on their cost-to-income ratio. For every 100 naira they earn, they spend about 72 naira.
High.
Very high. For Tier 2 bank, very high. So they need to work on that. Even though it came, compared to last year, it came down.
A little lower, yes.
And then the one you love so much, the MPL, they have managed the MPL below the 5% cap required by CBN. Even though we can see also that it got worse between last year and this year.
This year.
Sign of the times. ROE, reflects. If an investor gives the bank 100 naira at the beginning of the season, how much will they return? You can see it fell by from 14 naira to 10 naira.
Okay.
Again, sign of the time. So for a medium-sized Tier 2 bank, decent, clean brand that done well for the first quarter, held their figures, and they're hoping for the best in this season.
But I see with all the other banks you've analyzed, it's like the trend is
because they face the same macroeconomic challenges.
Yes.
And most of them carry the same kind of loan books, foreign currency loan books and local currency loan books.
Yes.
And then they are subject, like this balance sheet is done at, I think, 386 naira to the dollar. Compared to last year, that was done at 360. So you can see also the difference in that. So challenging time for the banks, and interestingly, they are up there with their brands, and they glaze on them and watching what they will do in these times.
It's going to be very interesting when you're here looking at Q2, as Q2 rolls in with the banking sector.
Q2 is going to be very, very interesting.
So shall we move to brewery?
Let's look at brewery. Let's look at Guinness.
Guinness, yes, they just released their results, yeah. There are some challenges here.
The interesting thing about this is the Nigerian market is the largest. Nigeria are the largest drinkers in Africa.
The largest drinkers
in Africa.
Yes.
Nobody comes near second. That's why, therefore, the 3 largest brewers in the whole world all have franchises in Nigeria. Nigerian breweries, Heineken, Guinness, Diageo, and then International Breweries Elisha, AB InBev. So these are AB InBev's largest brewery in the whole world. So they're all in Nigeria because of the population,
the customer base,
young population also. And so there's a lot of growth in the hectoliters of alcohol taken by our people. Yeah. So that's one area that was also very good.
Okay.
Now, so the brewing industry is struggling. It's struggling principally for several reasons. And is on this context we're going to look at Guinness results. Okay. The first thing is the macroeconomic environment that we belong to that is in place now. They belong to the sector where you can call discretionary spending. Basically, when people are happy, they'll spend more on that. When things are tough, people cut down on their expenditure or look for cheaper substitutes if they have to continue to drink. And this sector, there are 3 main players here, as I told you. Nigerian Breweries is the largest player.
Yes.
So apart from the macroeconomic environments, with the diminished consumer power, this is the first issue they have. The second issue is very competitive environment. There are 3 major players in this industry. Nigerian Breweries, about 55% of the market. International Breweries Elisha, 22.5% of the market. And then Guinness is about 22.1% of the market. So they are all fighting to the nail to grab the market.
Customers,
yes. The other issue that's affected the play here is this is the hunting ground for the government when they're looking for revenues. So the excise duties in this sector have been increased, especially for the alcoholic drinks and the spirits. Indeed, for the spirits, it was increased. It was increased to 35 kobo per hectoliter. For 105 kobo per hectoliter last year to now to 2 naira. So you can find to 2020. So it's a 100% increase. So you find the cost. Also, the other thing here is the overhang of doing business in Nigeria. For example, between December last year and now, the cost of moving their products from Apapa Port to Ikeja, where their factory is, has increased by 40%. So these are the things that have moderated the performance of Guinness over this environment. The results of the other players, Nigerian Breweries and International Breweries Elisha. Indeed, International Breweries Elisha actually made a loss. Nigerian Breweries actually, the result fell badly, so all of them are suffering. Look at the revenues. It fell, the top line fell by 5%. You will also notice that even despite the challenging environment, you can commend them for this. But we would have expected the fall to be more aggressive than this. Cost of sale, fell by 7%, and gross profits fell by 0.2% and 2%. But you put this in context, what is the gross profit margin? Despite the inflationary environment that we operate in, inflation hovering above 12%, you will find that they have held their gross profit margin. In last year it was 31%. This year came at 32%. So they have done well in that area. Look at marketing, distribution, and admin expenses, increased by 4%, 5%. You know why? They are spending money to stimulate demand.
So market,
to stimulate demand. So they're spending a lot of money to stimulate demand. Trying to encourage people to drink, buy one, get one free, and all the promotions they've been doing. But you see, you can commend them here because even despite the inflationary environment at 12%, they held this at 5% growth. So which is commendable too. Let's what's the next thing there? Let's see the next slide, please.
Next balance sheet type.
No, that's the next.
Yes.
Yeah, I want to talk about net financing costs. Look at it. That has been a Guinness major problem.
Massive increase.
About 2.1 billion growth, and that's why you can see that the profit, fell by 68%.
We've only got like less than a couple of minutes. What would the outlook for? I mean, you've given an outlook for banking. For breweries, do you still expect?
About
30 seconds if you can.
Brewery grows with the economy. If, as I said, discretionary spending.
Yes.
So people are happy to spend.
Yes.
As the per capita income of the country grows, their profitability and their sales revenue will grow.
Thank you so much. All right, Business Analyst Chika Mbonu giving us the lowdown there on Fidelity Bank and Guinness Banking and Breweries.